The financial system is facing a significant transformation, revealing that the convenience of digital payments is underpinned by an outdated infrastructure. When you make a purchase with your card at a coffee shop, it appears that the transaction happens instantly. However, the reality is that the money is stuck in a digital limbo, not yet in the merchant's account, nor fully under your control. This system, supported by banks and credit card companies, profits from the time it takes for payments to process. The global financial system operates under an illusion where transactions seem instantaneous, but the mechanism behind them is antiquated, predating the internet. This outdated financial infrastructure is increasingly strained as transaction volumes rise and new payment options emerge. Big tech's entry into the financial space is propelling the demand for real-time payments, which threatens businesses still relying on old financial tools for modern transactions, putting them at risk of obsolescence. So, at the heart of this issue is the disconnection between approval messages and the transfer of actual funds. When you tap your card, the process actually involves multiple parties, payment terminals, processors, card networks, and banks, all of whom take a cut of the transaction. After approval is given, the real money, well, it stays in your account while the merchant just gets permission to collect it. Brands like Visa and MasterCard, which, really symbolize speed, actually operate on systems that were designed when technology was significantly less advanced. Each payment method, whether it's a credit card, debit card, or digital wallet, has its own set of rules and timelines. This creates a pretty complex landscape for businesses to navigate, especially as they manage different payment types and all the associated fees. The different payment methods can lead to varied settlement times, and that, causes complications for merchants. This complexity can create significant challenges for merchants as they must reconcile expected payments, manage their inventory or service delivery, and deal with any disputes, all while waiting for the actual funds to arrive. As consumers enjoy instant access to goods and services, the businesses providing these goods must grapple with cash flow issues due to delayed payments. A small business owner, for instance, may not see the funds from a transaction until days later, which can significantly affect their operations. Furthermore, the payment industry actually benefits immensely from this delay. The period during which the money is stuck between accounts, often referred to as the float, generates billions in fees and interest for banks and payment providers. The financial revolution is not just about technological advancements, it's about addressing the underlying inequities within the system that keep money in transit for far too long. Businesses must adapt or risk becoming obsolete as consumers and the financial landscape, evolve towards real-time payment solutions. The current reliance on antiquated systems can no longer sustain the demands of a digital economy. Addressing these challenges will be essential for ensuring businesses can really thrive in this emerging financial environment.